First stock of the day that I traded was XGTI, and as you can see, it has a very similar pattern um, to NOR that I explained in the other video. So the play here was very similar to the play that I just did with NOR. I was pretty much looking for volume surge instances, and I was looking for a breakout. So in this particular case, um, I gotta admit that I was a little late to the party, not a little. And how unfortunately in trading, you gotta be on the spot with your timing, and you cannot chase stocks. And this is a rule that I just cannot repeat enough, and I just cannot emphasize enough that if you're late to the party, if you're late in buying a stock that already broke out, you might find yourself on the top of the mountain, and from that point on, the stock will decrease, just like in my case. So, by this time, I had 2 trades today. None of them worked out due to market conditions and some timing. And sometimes you're really trying to make the right trade. However, sometimes it's just not your day. So even if it's not your day, you gotta keep your rules in front of you, because even if you lose money, if you don't lose big, then you can recover the next day or the next week or the next month. So my thought process here was the following. From Monday on, actually it's Friday, from Friday on and Monday on, XGTI was trading at around the range of 41 cents. And, there was not much volume on it. As you can see, when you see stocks like this, it means that it's choppy, and choppy means that there's not much volume on it. So we can all see that on a given time frame, 400, 3,000 people bought it, 400 people, 1,000 people. It's nothing. Honestly, don't consider a stock under 100,000 um, people buying it. So the volume should be at least 100,000 on a given day. Now, what happened here, though, is interesting. So as you can see, the stock, went in its regular 400, and then a few thousand buys or sells a day, and then suddenly you can see the volume bars perking up a little bit. Now, what does that mean? That means that more and more people are getting interested in buying the stock, and as we check out the actual chart, we can see that the prices are perking up towards the short-term high, which was about 41, 42 cents. So if you see this early enough, you want to be there when the price tries to break out from its current high. Because if you are there at about 41, 42 cents, as you can see, then you have a good chance of quickly buying it and then selling it into a spike. Now, again, I use a lot of screeners, and one of those screeners are called unusual volume spike within the last 5 and 10 minutes, and with that, I have the ability to go check out stocks and check out whether they are worthy of an investment, whether they are about to break out, whether they already broke out. So it's a really good tool. You can use stock screeners in almost every platform. I use something called Trade Ideas, but there are a lot of other free softwares as well. So there's a lot of things you can do. All you got to do in trading, you got to find the right stock to trade. And I talked about it in my previous video. Unfortunately today, I just didn't find the right stocks to trade. There were indeed stocks today that broke out and you could have made some money on. In this particular case with XGTI, it did break out of the actual 41, 42 cent range. And as you can see, if you bought it around here, you could have made a good winning. You could have made all the way up to, on the first spike, all the way up to 54. So that's pretty much 12 cents. In this case, obviously, that's a big win in such a low value stock. I started looking at this stock at about 48, 49, right about here, when it set the initial highs of 50 cents. So my plan was, okay, let's wait until the stock proves itself. Let's wait until it breaks out again from that actual day high. And then on that particular power, in this market, if it does break out, it means it has strength in it. It has people interested in it. So if it does break out, then I'm going to buy right after the breakout point. It is a little risky because it can just as well fall back, but it's less risky than waiting way too much and waiting for it to go up and just be on the sidelines, and then missing out on a potential trade. So it's up to you what you decide how you want to trade it. But my strategy is, first, the stock needs to prove itself before I can trade it. And in a normal market environment, this is usually something that works for a few cents gain or a lot of cents gain, depending on the actual nature of the stock. In this particular case, as you can see, I bought the stock at about 0.54 cents, which turned out to be about the highest it went in that particular time period. You see, so that's a bummer. I am late to the party because it broke out from 41 cents, and given the recent market conditions, seeing that stocks like ASTI, which was at 21 cents, can run above 100%, seeing that other stocks in the past days were running above 100%, 200%, you never know how far these can go. So I still bought it and I considered, okay, fine, so if this breaks down big time, then I'm just going to sell it. And that's pretty much what happened. Usually, when a stock breaks out from the previous low of around 50 cents, you want to set your stop loss below that previous high, because if it breaks out and it goes to 54 cents, but then it breaks back again below that 50-cent line, it means that the stock is not good enough, at least at this time, and it's just going to break down, and you need to sell it because it's going to go further down. That's exactly what happened, and I sold, and I saved myself from the stress of watching my stock go down all the way to 45 cents. However, at that point, it got stopped. So you never know when you're going to find resistance at what price levels, but even in this market, this stock managed to get support at about 45 cents. So, in hindsight, everyone's smarter. If I just let it go a little bit further down, I would have been able to actually see it come back all the way to about 60 cents, and then potentially sell it into that spike from 54 to 60 cents. That's a good 10% gain on the money you put in. However, you can never know. The stock could have easily just gone down all the way back to about 41 cents. So it depends on your propensity to take risk. My propensity is fairly low at this point. Obviously, I bought for 54. I sold for 48. That was already above 10%. And I'm usually trying to get a 5% stop loss in, sometimes a 3%. But with such volatile stocks, you can never know. Plus, once you set a stop loss, it doesn't mean it's going to sell at that level. It means that it's going to initiate a sale at your stop loss level, and it's going to sell wherever it can sell the next instance. So if I remember correctly, my stop loss was at 49 cents actually, and it just couldn't sell until it dropped down to 48 cents. So there you go, you lost another cent on your trade. So you got to be careful about that. I think it's a great learning not to chase a stock, not to try to enter a stock when it's already way up high. However, again, it depends on your judgment what you consider being way up high. It's unlucky the market conditions are not right, and whenever the market conditions are not right, you should not trade every opportunity you see, because you should really just wait for one golden opportunity. And that's my mistake that I made, and I paid for it. However, again, if you cut losses quick, and if you don't take chances, just move on to the next one. Don't be upset about your losses, because the next stage is going to bring on more opportunities and hopefully bring on a better trade. So this is XGTI. I will have another trade for the day to explain, and then I'm going to post a summary about it on the blog. I hope you enjoy these videos, because I think they're really educational, and I think there's a lot to learn from all the mistakes that I'm making. Thank you.